Hello everyone, welcome to the Ichimoku.co daily US stock market review for the trading day ending Monday, May 12th. Well, we had fairly strong equities markets today. The S&P 500 closed at 1897, that was up 18 points, up plus 1%. And the Russell 2000 was the leading index today, closing at 1134, plus 26 points, closing up 2.4%. Now we saw the S&P making new highs almost, roughly about 0.1 off the new highs, so quite a bullish trading day today. But with the Russell 2000 up 2.4%, it meant that there was much more interest in the smaller cap stocks today, and they were outperforming the larger cap stocks. And that is a little bit of catch-up going on, where we had the S&P 500 performing much stronger and representing the larger capitalised stocks, outperforming the smaller capitalised stocks, and really an unbalanced market now playing catch-up. Tomorrow should be an interesting day. We'll see whether the buyers can maintain that momentum that they built today. We have the retail sales figures coming out, and they're expected to show continued growth, so that could be a good impetus for the market to make new highs for tomorrow, new major highs. So just looking quickly at the S&P 500, and here we have a very strong bullish candle, a large white body candle with the market opening at the lows and closing pretty much up at the highs, showing that the buyers have closed with control and they've been very strongly committed to taking this market higher. For the previous day's trading, we saw the market finding support once again at that important 1867 level, and today taking out the 1883 level of resistance that has been tested in the recent past in a very bullish manner to close up pretty much at that major high around that 1897 level. Today we traded up to 1897.13, so 0.15 off that high, and certainly providing what looks like some solid momentum now from the buyers to take out that high over the next day or so. In terms of Ichimoku, we have a strong market in all three timeframes, trading above each of the Ichimoku indicators and not looking overextended in terms of the distance away from the cloud, so that's a positive sign for this market at the moment. And if we look at the Chica span, that's now just above the corresponding price action, so it's confirming the bullishness and suggesting that we could be seeing the buyers build the momentum to take out that 1897 high. Now in terms of the Russell 2000, and here we see another white body candle, and a candle that has gapped up at the open, suggesting a lot of enthusiasm in this market for today, and little wonder with it being up 2.4%, and that's this reallocation back to the small cap stocks, not necessarily away from the large cap, but more of a reallocation towards those stocks that have been lagging. And we can see here on a relative strength basis that the Russell 2000 has been underperforming the S&P 500 quite strongly for a long period of time, since the end of March. And then during that period we also saw the index break out to the downside below the Kijun-sen, rallying to find resistance around the Kijun-sen and the Ichimoku cloud, and then selling off to trade below the Tenkan-sen, below all of those indicators, with the Chica span down below them as well, below the price action, indicating a very strongly negative market. Now the problem here for the small cap stocks is that if we do see this rally continue over the next day or so, we will be interacting with the resistance around the cloud and the Kijun-sen once again. So in the near future, over the next few days, it's unlikely that we will see this market break out up above the cloud. But as we move forward, we are seeing a thinning of the cloud. So there is a possibility of that happening over the next week or so if the buyers can maintain this momentum. We have also seen the relative strength move to within the Bollinger Bands here on this relative strength comparative indicator, and suggesting that there is a possibility that if we can move above that middle line, which is the moving average, we could then start to see the Russell 2000 outperform the S&P 500. In terms of volatility, fairly low volatility at the moment, so we could see a tick up in volatility, and if we see some good follow through to this bullish market that we've seen, and volatility ticking up as a consequence of that, we could see the buyers building momentum to test at least two within the cloud and perhaps even maintain price action within the cloud. But at the moment we do need to be very careful of how the market reacts around the Kijun-sen indicator, which is trading at 1140, and the bottom of the cloud, which is around the 1150 area. Now, just looking at the sectors, and the sectors were generally up across the board. We had the technology sector up 0.22%, and year to date that's down 1%. The basic materials sector was very strong today, up 1.8%, and year to date is up 3.6%. And the utility sector was down 0.4% today, and year to date was up 9.5%. Sorry, just a quick correction here. The the technology sector was actually up 2.2%. It was the leading sector today, and I did say that it was 0.22%. It's actually up 2.2%, leading the sectors, and then second in line was the basic materials, up 1.8%, with the laggard being the utility sector, down 0.4%. And here we have the technology sector, a very strong white body candle and closing in a very strong bullish manner up above the Tenkan-sen, indicating bullishness in that short-term time frame, looking very similar to the Russell 2000 indicator, where we had that rally to the cloud, being sold off from the cloud and now rallying. And so therefore this sector may find resistance, as with the Russell 2000, around the Kijun-sen indicator, which is around 2560, and the bottom of the cloud around 2587. Has been very strongly underperformed the S&P 500, as we can see, and remains to underperform, but not as strong as previous. And volatility is at a fairly low level, so we could see volatility tick up, and we could see this rally continue. But whether it continues through into the cloud is another thing. In terms of a slightly bigger picture on the technology sector, and this is the weekly chart, and we can see here that we still haven't crossed up above that Kijun-sen. We have a bullish market in that longer term time frame, so trading up above the cloud and have been for quite some time. But the area around the Kijun-sen has been holding roughly as resistance where it was previously support for the past 3 weeks. So it will be very important trading coming up over the next week or two for this market. And if we see a bullish breakout up above both of these indicators, we could see some decent price appreciation and even perhaps testing up towards these highs that were established in March. In terms of the Chica span, that is still above the corresponding price action, so it's suggesting that there still is some decent upside momentum. And what we're seeing here at the moment, if we do see some follow through, we could see a change of the trend in all three time frames to bullish if the buyers can maintain this momentum. Now, just looking at the basic material sector, and here we have a sector that's attempted to break out up through the top of the cloud, testing back down to within the cloud, finding support, breaking out again, and then testing back down. And each time that we're breaking out, now we're not seeing any decent follow through. We're seeing fairly small body candles and then some black body candles here. So very important trading for this sector over the next few trading days. We are at an important resistance level that has been tested in the recent past around this 1150 level, and we are seeing a fairly much stronger candle here than the previous breakouts that we've seen. So there could be some renewed bullishness in this sector from the buyers here, and they could be building some momentum to perhaps trade this market to higher levels. Now, higher levels is perhaps up around this 1168, 1170 area, so the amount of price appreciation may be halted around this region. This sector has been underperforming, not terribly strongly. It's fairly weakly at times here. So here we see trading down below that bottom Bollinger Band, but definitely trading down below the moving average for quite some time, suggesting that that is a weaker market on a relative strength basis than the S&P 500. But if we look at the volatility here based on the Bollinger Band width, for quite a long period of time we have been around a cyclical low in volatility, and we see this large sideways action occurring. So not a lot of good trending action in that longer term time frame taking place. So what we would expect to see is that volatility will eventually tick up, and if we can see the buyers build enough momentum to test up through this current resistance that we're at, and then perhaps through this area, we could see some strong price appreciation. And on the weekly chart we can see this strong sideways movement that's been occurring since roughly about February this year, and the market, after trending up and breaking out up above the cloud and finding support at the cloud, we've seen price action maintained around that 1150 area, oscillating above and below there. The market hasn't sold off to test down towards the Kijun-sen, even though the Kijun-sen has been flat. We have been testing roughly towards there, but we've seen the buyers coming in and then attempting to sell off, so a very indecisive market in that longer term time frame. We are near a cyclical low in volatility, so it wouldn't surprise to see it pick up. But in terms of the monthly chart, and here we see the resistance around the top of the cloud, and that's obviously why we've seen the market attempting to trade up and then selling off. So it's the resistance at the top of this Ichimoku cloud on the monthly chart, and the resistance just above around these swing highs that has set the tone for this market. And with the buyers not being able to break up through there, we have seen this sector underperforming the S&P 500 for quite a period of time, and quite strongly underperforming since roughly October, September in 2011. So a fairly weak sector for a long period of time. In terms of the utility sector, and here we've seen some first time frame downtrending candles here following this very strong bullish activity up above each of the Ichimoku indicators, and for the first time in quite a period of time we've seen the market testing below and closing in a bearish manner down below the Tenkan-sen, with each of these candles having the sellers close with control. But we've also seen the market testing down to the Kijun-sen indicator, and the last time that we tested to there was in late March. We did see buyers come back in, but on that candle that tested there, the buyers had control as they tested down, and the sellers lost commitment at the Kijun-sen. With today's candle, we've actually seen the market close at the lows with the sellers in control, so there is a possibility of this market trading lower. Now, we are bullish in the longer term time frame, so that's an important thing to remember. But just looking here at the relative strength comparative, and we are seeing for the last couple of candles the sector underperforming the S&P 500. Now, we have seen that in the past. It was short-lived for about a week or so, week and a half, and we then saw the buyers come back in and close the market up above the Tenkan-sen. So we will be looking for that. We are getting near a cyclical low, so we may see some strong price trending action, so we will be on the lookout for that. But if we do see the market trade low, we do have some support just down around this swing low, and that isn't too far from where the market's where the sector's trading at the moment. It's around 306. We are trading at 308 at the moment, so any depreciation in price may be short-lived. But certainly the worrying thing here is that we have seen strong bearish activity down below the Tenkan-sen, which we haven't seen for some time, and it's crucial how the market reacts to the Kijun-sen at the moment. Now, just a few stocks that are worth looking at. One is Alcoa, and that is in the basic material sector. The code is AA, closed at 1381, up 4.2% for today. And the other one was a stock we looked at last week that sold off very heavily, Twitter, TWTR, closing at 33.94, up 5.9% today. So to Alcoa, and here we see a very strong bullish breakout up above the Tenkan-sen indicator. The buyers in control, very, very solid performance here. We have a bullish market in all three time frames, trading above each of the Ichimoku indicators, confirmed by the Chica span, suggesting solid upside momentum. And the important thing here is the price action was attracted back towards a flat Kijun-sen, and we saw buying activity come in there. We saw very weak candles down around that area, and suggesting that the buyers were the stronger party here. In terms of relative strength, we have seen Alcoa outperforming the S&P for quite some time, and quite strongly at times, and now we have moved outside that upper Bollinger Band, suggesting that we could see some decent follow through. There is some resistance at the previous swing high around 1389, and it seems though that this solid white body candle is looking as though the buyers are attempting to build momentum, and they may successfully test above that level. looking at volatility, we are getting towards a cyclical low, so we could see volatility tick up with the continued buying to the upside. In terms of the weekly chart, and a very strong chart here, trading up above each of the Ichimoku indicators, outperforming very, very strongly for quite a period of time since November last year. So a stock that has travelled since breaking out, giving a buy signal with the breakout up above the Ichimoku cloud from 1920 up to around the $13.80, $14 level. But importantly here, looking at the monthly chart, and we have seen this rally here through the Kijun-sen and the Tenkan-sen, but the market is now interacting with the Ichimoku cloud. So it suggests that this run that we've seen in Alcoa may not continue to the upside. We are seeing volatility tick up, outperformance, but not terribly, it is strong. But not terribly dynamic, and we are seeing now some small body candles appear for Alcoa, so there is some doubt about whether we will continue to see the type of price appreciation that we have seen over the previous 6 months or 7 or 8 months or so. Next, moving to Twitter, and here, if you recall, we looked at this stock last week, and very strong bearish activity below the Ichimoku cloud and each of the Ichimoku indicators. We had a brief rally to the Kijun-sen, and then an indecisive type doji candle, and then the sellers coming back into the market quite strongly. We have seen the market rallying over the last 3 days. Today is the strongest of those 3 periods. A larger white body candle than we have seen, and suggesting that even though this rally that we've seen has been weak, with the buyers closing with control, we could see the rally continue. Now I suggest that with this Tenkan-sen indicator here pointing down very sharply, and that's around the 35 level, 35.14, we could see the sellers come back into the stock around that level, and that's what we tend to see when we have very solid downside momentum, as suggested by the angle of that Tenkan-sen indicator. Looking at volatility, however, we perhaps are seeing a cyclical high in volatility. We are at a very high level historically, and it wouldn't surprise to see volatility roll over and see this stock congest around this area, or for it to perhaps not test down below this swing low and make new lows. But the stock has been strongly underperforming the overall market. It is still underperforming. It hasn't moved back to within the Bollinger Bands here, and certainly no hint that we are going to see outperformance. So really quite a weak stock in relative terms. Now the other thing here too is that the Chica span is still below the corresponding price action, and is suggesting that there is still solid downside momentum. But when we look at the distance of the stock away from the Ichimoku cloud, it still is looking overextended, and the distance of the Chica span away from the stock price action is suggesting that it is looking overextended to the downside as well. So some sort of price appreciation over the next couple of days, and as I've mentioned, possibly a test to around or even slightly above the even slightly above the Tenkan-sen wouldn't surprise.